Good day. In this video, we are to create a spreadsheet from these given values by a certain company, Alhambra Aluminum Company, a manufacturer of recyclable soda cans. And we are to prepare a schedule of cost of goods manufactured, prepare a schedule of cost of goods sold, and prepare an income statement using the Excel spreadsheets. I have prepared here the elements and the formula to save us time in making this video tutorial. So let's start. First, we will type in the headings just like here, and then type all the elements of this schedule. We will fill this up. These highlighted yellow portions will be based on this given data. For raw material inventory January 1, it's $55,000, so we type 55,000. Make sure you format this by its currency. Next, add purchases of raw material. The company purchased $240,000 of raw material, so we put here $240,000. So therefore, the raw material available for use is the sum of these two. Then for deduct raw material inventory December 31, we will use this one, $75,000, so we type in $75,000. The raw material used is the difference of these two, raw material available for use, and we deduct raw material inventory December 31. That will give us $220,000. For direct labor, we have $420,000, so we type $420,000 from here. And for this portion, we will just copy this one. For indirect material, we have $12,000. For indirect labor, we have $22,000. For depreciation of plant and equipment, we have $110,000. For utilities, we have $23,000. And for other expenses, we have $35,000. You can see the manufacturing overhead is the sum of these values. For total manufacturing cost is the sum of raw material used, direct labor, and the total manufacturing overhead. Next, we add work in process January 1. We can see here we have $110,000, so we input $110,000. That will give us a subtotal of $952,000, which is the sum of total manufacturing cost and the work in process January 1. Then we deduct work in process inventory December 31. We find here $125,000, so we input $125,000 here. That will give us the difference of $827,000. The formula is subtotal minus work in process inventory December 31. Next, we will create the schedule of cost of goods sold. First, we input the finished goods inventory January 1, which is $160,000. This one. And for add cost of goods manufactured is from the previous answer, 827,000. So we put it here. That will give us the cost of goods available for sale, which is the sum of finished goods inventory January 1 and cost of goods manufactured. Then we deduct finished goods inventory December 31, which is $155,000. That will give us a cost of goods sold, $832,000. Lastly, we are to prepare an income statement. We have sales revenue, $1,210,000, so we input that here. And our cost of goods sold is from here, which is linked from our previous answer, 832,000. Which give us gross margin, which is the difference between sales revenue and cost of goods sold. That is $378,000. Then we input the selling and administrative expense, which is $105,000. That will give us income before taxes, $273,000. The formula is the difference between the gross margin and the selling and administrative expense. Then we compute the income tax expense at 35%. So we multiply 0.35 to income before taxes. That will give us $95,550. And finally, we have the net income, which is income before taxes minus the 35% income tax expense. That will give us $177,450. Thank you very much.